Hey everyone, Brian from Bearable Traders here. Sunday, January 20th. Can't believe we're 3 weeks into the year already. Starting to fly by, and market's been moving up. It's been pretty good for the bulls so far this year. Let's take a look at the market internals for a start. You can kind of see here are the stocks above their 200-day moving average. I think last week it was about 22, now we're at 26-ish. Percent above those, so these are moving up. 50-day stocks above their 50-day moving average. I think last week we're at 45, now we're at 67. So market internals are definitely improving, and of course it's not surprising, just given the bounce off the December 24th low that we had. And market's coming back pretty strong here. Let's take a look at the groups and see what's performing. Industrial goods seems to be at the top of the list. Technology was good on Friday. Let's take a look at the week and month. Financials actually had a great week. Had some earnings. All the earnings came out on the big banks this week, and banks responded pretty positively to that. Financials, industrial goods, still at the top of the list there. Financials good on the month as well. So maybe the financials are starting to turn around here. They've been kind of the laggards. Let's take a look at the SPY. Let's see what the SPY's done over the last week. You can kind of see here 263 was this line I drew in here. That was presumably what was going to be the level of significant resistance that the market was going to get to. And I think a lot of people thought we were going to hit that level and pull back. And certainly we kind of hit that level on Thursday and pulled back and just stopped right on it. And I'm suspecting a number of people got short in this area. And Friday came out with some news about the China trade deal, and we were off to the races again for the bulls. You can see here the volume came in stronger on Thursday, and I'm going to call that the pain trade, because I think a lot of people were expecting this level to be a significant level of resistance to get through, and if at the very least we might just turn sideways there, just because this was significant level of support back here. Once you break support, support becomes resistance. So anyway, we plowed ahead here, and who knows where we're going to go next. I think if we continue the pain trade for the shorts, it's going to be to continue to the upside. There's a level here that we could get to. That could be a level of resistance, and even as high as up here around 278, 280 if we keep going. So you can kind of see here all the moving averages are continuing to go higher. The 2 nines, the simple and the exponential, the 20s curling up. It all looks pretty strong. So and we broke through the 50 here as well. Let's take a look at some trades we're in. Calm, for the members who are getting our email blasts about the swing trades. You can see here we got involved early and took some off at 44 on Thursday, and it's got a bit of a pullback yesterday because we hit this level of it's kind of figured where that's exactly why I took some off at 44, because that's kind of where I figured we'd be topping out, and we had a pullback. So let's just we'll see if it holds. We've already taken a significant portion of that trade off. But if you want to get the emails there, you just go and sign up on our website, the Bearable Traders website. It's another trading under swing trading at the bottom of the page there. Let's take a look. EDC have been in for a while. I got into this before we were sending out the emails, but I've been talking about this on a number of these posts. Continue to hold EDC. I think it looks good. We're getting into a level of resistance here. And if we can get through that, next level is way up here. EDC is an emerging market ETF, and I think it's a beta as well. So you get a magnified move on this, which has some upside. Obviously, you've got the upside potential, but obviously as well you've got the downside risk on that. But I think emerging markets should continue to do well here, especially if the US dollar continues to weaken. It's weakened a bit, but it seems to have leveled off. So we'll see what happens there. Gold, I've heard a number of people advocate about buying gold. Some of the talking heads on TV are all talking about buying gold. I got out of my silver and gold position. I kind of felt like it had got to a level of resistance. And if the market continues to push higher, like I'm thinking it might, I don't think gold's going to be something that people are going to be rushing into. I think gold got some favor in December when we had that real flush in the markets and people flocked to gold. But if we continue to hold here and maybe leak higher, I can't see. I mean, possibly gold will go higher, but I'm not a gold bug. Let's just say that I'm not. Some of the people are advocating to buy into it, and I don't see it at this level. If it can break this level, then yeah, it should be interesting. Dust is a way to play the miners. If you think gold is going down in price, you can kind of see here some bottoming action on dust, and that's where I would put my money right now, in dust. So that's my rant on metals right now. The other stocks that have been hot this week, CGC, the pot stocks have all been lighting it up, as they say. You can kind of see here we had a great run after through the last couple of weeks or a couple of days, and now I think we're getting into a level of resistance here. So I wouldn't be chasing these up here. I think this action looks a little toppy to me. We had a bull flag, tried to break higher, couldn't. So we'll see what it happens on Tuesday. But again, I'm thinking this action looks a little toppy to me, and we've had a really nice run, and I think we might get into this type of action for a while, a bit of chop. EA goes into my FOMO file. I really wish I'd have bought this. There's a kind of inverted head and shoulders here. You can kind of see came down, did the head, did another shoulder, and then we took off. And you can kind of see here there's a level of resistance here. We punched through it, came back, tested it, and now we're going higher. There's a next target in my mind, and it could continue to go higher. It does look strong. Not bad volume, so something to keep an eye on. EA, all the moving averages are turning up here and crossing over the 20 and the 50. Somebody in the room asked me to look at Square on a swing trade perspective. Again, it looks it's been strong the last couple of days. Look at that nice volume. Another FOMO. I guess you can call this another FOMO file trade. It would have been a really nice long right about here. Did a bit of a double bottom or a higher low, whatever you want to call it. Came back, pulled back down, and now it was off to the races as these moving averages turned higher. And but right now I'm looking at this and I'm thinking this is looking like this 73 area is kind of looking like a level that might have at least maybe might stall there anyway. But and it's pretty extended right now with these two days that have been big up days. So I'd wait for a pullback on it and see what the market does. But could go higher. This was over $100 late last year, so got a lot of room to go to the upside if we really wanted to push along there. That's it, guys. That's overall week. We'll see what happens. My inclination is I think the market's going to push higher. We'll see. Part of it obviously is going to be news flow dependent, and if there's some more good news out of these trade talks, where it's going to go higher. If the Fed sort of keep their head down and not talk too much about interest rate hikes and that, again, I think the pain trade is to the high side. So if you haven't got my book yet, How to Swing Trade, it's on Amazon, just showing it here on the screen. And we'll look forward to seeing everyone in the Bear Bull trading room on Tuesday morning. Have a good rest of the weekend, everybody. Bye for now.